They say Robinhood steals from the rich and gives it to the poor. In this case, Robinhood could be stealing from us without us knowing about it. So in this video, we're going to find out the truth about Robinhood, what goes on behind the scenes. So hi everyone, my name is Kenny, lead analyst at The Fifth Person. So today we're going to talk about zero commission brokerage, especially Robinhood. Is it really too good to be true? What are the pros and cons of using such a brokerage? So before further ado, let's jump right into the video. So in the first half of 2020, Robinhood made $270 million. The question is, how can a zero commission brokerage like Robinhood make $270 million without charging you anything? So the answer here is pretty simple. There are two factors driving their revenue. Firstly is the sale of order flow to high frequency trading firms like Virtu Financials and Citadel. So how this works is basically they get a commission based on the dollar volume that they send to this high frequency trading firm, usually in the range of 0.00026 cents per dollar. So just to give you an example, and why do high frequency traders like to purchase these order flows, is simply because these order flows allow them to do minor arbitrage in the market. So let's say, for example, you buy a share for $1. What happens is all these high frequency trading firms, they will go on to the market and they will look for deals. So more often than not, they are able to look for a share that costs about 98 cents. So they sell you the share at $1, they buy the share for 98 cents. So in a way, they make an arbitrage profit of 2 cents. And on top of that, they will pay the cost for them to trade this share, the rights for them to execute and trade this share of 0.0026 cents to Robinhood. And in a way, they make about 0.0019 cents. So basically around 19 cents, 1.9 cents of profits. Basically, that's how much they will be making with regards to that. And of course, this might not seem much to us, but of course, if you generate volumes, billions of dollars in trades, or even trillions of dollars in trades, that could amount to a large amount of profits for both the high frequency trading firms as well as Robinhood. So the thing is, what's the downside for most of us? Well, the downside for most of us is because we don't get the savings. So initially we could possibly get a savings of 2 cents, but because you go through the high frequency trading firms, there's a middleman in between. They have to eat. So that's the reason why you will not get the savings. For millennials or people who are starting out in investing, it's really not a big deal because we got the price that we set for. But for professional traders, people who trade big sums of money, all these minor savings could turn out to be thousands or even hundreds of thousands of dollars if they trade a huge volume. So this brokerage platform is actually good for people with little to no money. It's a good platform to start with, but at the same time, it could be very dangerous as well. But before I go on to that, let's talk about the net interest income. So aside from selling order flows, they also make money by using whatever cash balance you have remaining in your brokerage account and sweeping it into securities, overnight securities, where they generate point something percent, and they do that every night over the course of a period of 1 year. And that's where they generate interest on the cash balance, and after that they pay you an interest of 0.3%. So the difference, the spread, is basically what they make in terms of their revenue. So these two together, so there are two factors, right? Selling of order flow plus net interest income. That's how Robinhood generates their income. So aside from that, what's dangerous about this platform is that a lot of people have no clue about what they're doing on this platform. Especially, there's a case that came out recently. Is Alex Kern, a 20-year-old American who traded options on the Robinhood platform. So because of that, basically his account balance showed a negative amount of 730,000. So basically there was a glitch in the way they displayed the amount, and he didn't actually lose 730,000, and it was so much less. But because he did not understand the instrument, he thought he lost a lot of money. That's why he left a note that he committed suicide, because I think he felt ashamed having lost a lot of money for the family. So the thing is, with a lot of people that are going on Robinhood, they have no clue about what they're doing. So it's very important that you get yourself educated, knowing full well of the instruments that you're trading, because they have a couple instruments out there, whether it's stocks, options, gold, even cryptocurrency. All these can be really dangerous, especially when you take on additional leverage to trade these financial instruments. So aside from that, it's also very crucial that you understand that Robinhood is built in such a way that they gamify the app, right? It's really colorful, it's very appealing for you to click, and it makes it very difficult for you to back out. So when you enter a trade, you can buy a fraction of a share. For example, Apple is $141. So if you don't have $141, you can buy 10% of a share by paying $14 for the share, and basically you can trade a lot of expensive stuff. So it's make it very easy for you to trade on the stock market, and at the same time you get all these badges. So for example, if you were to trade a tech stock, you have a tech stock badge, so on and so forth. So in a way, you're not trading to improve your profitability, but sometimes you're just trading to get that award, that badge, to meet the expectations, to think that you are improving as you collect these badges, but in fact you are not. So that's why it's crucial that when you trade on Robinhood, that's one tip that I can give you, is to have a trading journal. Understand what you're investing or trading for. So if you're a trader, you need to know, or investor, you need to know how much you're invested, what's your investment thesis, and this doesn't have to be very long. It can be a couple sentences, right, of what you're doing, what's the upside, what's the downside, what's the plan for you to exit, when are you going to exit the stock. So that's very important, but not a lot of people are doing that, even for seasoned veterans. So it's very important for you to have a journal. So but however, if you're a long-term investors, and for most of us, especially for me who trades long term, it doesn't make a much difference when I do use a zero commission platform, because for $5 to $10, and if the amount is huge enough, I'm holding it for the long term, so I'm not trading in and out. So zero commissions doesn't really benefit me that much, and at the same time I get savings from the electronic brokerage that I'm using. But these days, most electronic brokerages are actually pretty cheap, right? You can trade within $5 to $10, so it really doesn't make much of difference. But on top of that, if you're a professional trader, it's best to use a platform like Interactive Brokers or TD Ameritrade, because they have better cost savings, and also their margins when it comes to loans are so much lower than what Robinhood can offer. So that's basically how you should think about when you're selecting your electronic brokers, right? You need to know what fits you, what's your time frame and your mindset, what is it, does it suit your style of investments. So with that said, that's all I have today for you. I hope you understand how Robinhood makes money, whether the pros and cons, the danger of not knowing what you're doing and blindly copying and following these trends. So of course there are more ways to trade in the stock market aside from Robinhood. Of course, recently there's also one other one called eToro, where you get to copy people's trades. So that is so pretty dangerous, because you need to know what you're copying, who you're copying, whether they have a consistent record. It's good to have an idea of what the investors are doing, and then do your own homework and decide whether you want to invest in it or copy them based on that single trade. But do not just blindly copy their whole portfolio. In the end, when you start to lose money, in essence, it's actually your fault, because you're the decision maker. Whether it's on Robinhood or any platform at all, it's you. But you have to be aware of what you're doing. That's all I have for you today. Thank you for watching, and if you like this video, hit the like button, and if you find this content useful, share with your friends and subscribe to the channel as we bring more of this educational investment content to you. And thank you very much for watching. I'll see you in the next video.